All right, let's get right into this. I want you to picture the scene. It is 4 a.m., Friday, January 30th, 2026. Most of us are sound asleep, but if you're watching the precious metals market, you are seeing absolute total chaos. After a massive run-up, something just snapped.
So, what in the world happened to gold and silver while everyone was sleeping? I mean, the price moves were so violent and so fast, they sent shockwaves through the financial world before most folks even brewed their first pot of coffee.
Just take a look at this. 1 minute, gold is hitting a brand new record, smashing past $5,500 an ounce. The very next morning, boom, it craters to under 5,000. That's a nosedive of more than $550, a nearly 10% haircut in just a few hours. A classic inverted V that just wiped out anyone who was long with leverage.
And as the sun came up, the internet just exploded with opinions. This quote from our source material, Phil Stockworld, just nails it. As the market was freaking out, you had all these so-called experts flooding social media, each one with a super confident, totally different theory for what just happened.
But here's the kicker. By 6:51 a.m., the whole thing was already over. The market started to snap back just as fast as it fell, which made all those instant expert takes look pretty silly. And it left everyone with one big question. Was that a real market event, or was it something else?
Now this is where it gets really interesting. The source material we're looking at argues that the problem isn't the market itself. Nope, the problem is the information about the market. And they have a very blunt name for it.
E-shittification. It's a mouthful, I know, but the idea is pretty simple. AI and social media now let total nonsense spread way faster than any real journalist could ever fact-check it. This creates this perfect fog of war, an environment where any narrative, true or not, can be cooked up and blasted out instantly. It's the perfect cover for market manipulators.
And this slide just shows you the result perfectly. At 6:30 in the morning, the story is all about panic buying and gold to 7,000. Just 45 minutes later, after the price gets hammered, the story completely flips to historic crash and end of the bubble. See, these aren't analyses, they're emotional triggers. They're designed to make you FOMO buy at the very top and panic sell at the absolute bottom.
So why does this work so well? Well, it's like a toxic cocktail. You've got these thin overnight markets with not a lot of buyers or sellers, plus tons of leverage. That means a couple of big players can just shove the price around. And at the exact same time, you have this army of AI bots and influencers ready to create a reason for the move out of thin air, which then totally spooks regular investors into reacting to those headlines.
So here's the crucial point. In the market today, if you can control the story, you can control the price. And the source material actually lays out the exact playbook for how it's done. This isn't some crazy conspiracy theory. It's just a very rational strategy.
It all comes down to simple math. Let's say you're a big fund and you want to buy a ton of gold or Bitcoin. You've got two choices. One, you could spend billions of dollars actually buying it, which of course would just drive the price up while you're trying to buy. Or you could spend a tiny fraction of that, say $1 million, to pay some influencers to spread fear and panic. That panic causes a crash, and you get to scoop up your position at a huge discount. It's simple. Narrative is cheap, liquidity is expensive.
And it builds into this repeatable 5-step process. First, you seed the narrative, either fear or FOMO. Then, you engineer a sharp price move in those thin, overnight markets to trigger a whole cascade of stop losses. Those are the automatic sell orders. You dump into that chaos, forcing the price down even harder. Then, at the very bottom, when everyone is panicking, you quietly buy up everything you want. And finally, you help launch a new, positive narrative for the bounce back up.
Now, I really want to be clear here. The source isn't talking about some secret group of people in a dark room. It's describing a logical and profitable strategy. It just exploits the known weaknesses of our modern market, where the story itself, the narrative, has become just another weapon in a trader's arsenal.
So how does this actually work in the real world? How do you actually pull off that first step, seeding fear and FOMO? Well, it turns out it's basically become a science.
Let's say your goal is to get wealthy investors, maybe in the 45 to 65 age range, to panic buy precious metals. You don't even need to write a script. You just book the right guests on TV. The source points to these three as classic examples. Guests whose entire public persona is built to deliver one specific pre-packaged message every single time.
And technology makes this whole process scarily efficient.
A TV producer can use AI to instantly find the top 3 guests who will reliably stir up the exact emotion they want to create in their target audience. They know exactly what these guys are going to say before they even call them.
This quote from the source really just pulls it all together. Social media isn't just a place where people chat about the market anymore. It has become a fundamental part of the market's plumbing. A viral tweet, a TikTok, they can act just like a huge buy or sell order, routing what investors do in a totally predictable way.
Okay, so if the whole information game is rigged like this, what can you actually do? How do you defend yourself? Well, fortunately, the source material gives us the answer to that too.
And the defense is actually really simple, though that doesn't mean it's easy. You have to stop treating the information you see during a crazy market move like it's a neutral weather report. It's not. The key is to have your own strategy based on your own research already in place. And then you just stick to it. You have to ignore the fire hose of noise that's designed to make you emotional.
The source argues that once you can actually see the gears of the machine, you're way less likely to get chewed up by them. This cycle just repeats over and over. A big pile of money pays influencers to target a specific emotion. That emotion is then used to justify a big price drop in thin markets, which allows for a quiet accumulation phase right before a brand new story is launched for the reversal. Once you see the pattern, you can step out of the trap.
And this right here, this is the single most important takeaway from this entire explainer. The next time you see a market in a free fall and a million headlines pop up explaining with total certainty why it's happening, I want you to remember this. That story you're reading, it's not an objective report. It is almost certainly an advertisement for someone else's trade.
And that brings us to our final thought. In a world where every story might just be pushing someone else's market position, it really forces you to ask a pretty fundamental question. Who or what can you actually trust?